Good day folks, Jim here from FX Charts, Monday the 27th of Feb. Thanks for dropping by. The dollar finished the week under a fair bit of pressure. The euro was underpinned earlier in the European session by slightly better than expected GDP growth, and then later we got some soft US factory orders. So that combined to push the dollar down through some support, and the euro finished pretty much on its highs back above 137 where it's opening up this morning. Cable particularly looks pretty good. That's taken out some multi-year highs, and over the weekend some Chinese loan data was better than expected, so that's given the Aussie a little bit of a boost first thing this morning. So we're going to have a look at the charts, and as you can see, this is a 1 hour euro chart. Now the euro has actually gapped up a little bit this morning. It closed around 136.90. It's opened up just above 137. Friday's high 137.14. Now as you can see that the dollar, albeit very choppy, that's it's under some pressure as the euro heads higher. We're going to look further out. The euro is actually going to come into some resistance up here at around this sort of 137.5 level, and I'm not sure we're going to get there today. The previous high up here was around 137.40, so just ahead of 137.5, 137.30.40. We're going to see some sellers. Now it's a US holiday today, so I kind of expect a pretty quiet session. Now everyone's getting quite bearish on the dollar for further progress for the euro on the top side. I'm just a little bit wary because we've got some slightly bearish divergence growing on the euro here. And the RSIs equally, they look as though they might be running out a bit of steam. But having said that, the dailies are possibly picking up a bit of positive momentum, so we could head a bit higher. All up, I think it's going to be pretty choppy. 137.40, I think, probably cover the top side today, and I think 136.5 will probably be the base. And 136.70 was Friday's low. If we just go back to the hourlies here. We've got the 100-hour moving average here at 136.5, and below there, the retracement level, the 38.2, is at 136.20. So I don't think we're going down there today. And all up, it should be reasonably quiet. There's no data out of Europe either, and with the US holiday, should be fairly range bound. I think near 137. Looking further out, if I just go out to the monthly Ichimoku chart, as you can see here, we're bumping right up against the monthly cloud. Now that has contained it pretty much over the last few months, and it could well do so again. So just keep that in mind. If we do break into the cloud and we make a monthly finish, which isn't for another week or so, above here, then we could head a bit higher towards this sort of 138.90, 139 level. But I think that's a little bit premature. Okay, so moving on to dollar yen. Well, the yen's it's mucking around this 101.70 level, which previously acted as a bit of a pivot, and it's actually broken a little bit lower from its Friday close. It's been down to 101.60 so far this morning, 101.63. Now there's not an awful lot out. We have got the Japanese GDP today, which might provide a bit of volatility, but there's not an awful lot else out, as I've already said about the euro. So I think the 4 hourly charts look fairly flat. Now we did get down to 101.57. We saw a bit of a spike down there as stops were triggered on Friday. I'd be a bit surprised if we go below there today, but there's further support down around this sort of 101.40 area, which was this spike low after the non-farm payrolls, and then we've got good trend support here at around 101.20. Equally on the top side, I don't see an awful lot of light there either. 102 probably cover it today, and we've got the 100 and the 200-hour moving averages both above here, so I don't think we're going much above there. And really, that should cover it. We've also got on the downside, we've got the 100-day moving average. That's down around here, around this 101.20-25 area. So I don't think we're going too far in any direction really. Cable, that's been the real mover. It took out on Friday, it took out 167.45.50 area, which was the 2011 high, and it's actually opened a little bit higher this morning. It's been up to 167.68 in Asia. Now it looks pretty rampant, and the market is. It doesn't feel as though it's got sterling on board. It feels probably a bit the other way, actually. Nobody was really expecting, I don't think, the strong growth upgrade last week from the Bank of England. So anyway, it's looking high. It does worry me a bit because the 4 hourly charts, these are very overbought now. The stochastic suggests the move could be running out a bit of steam. But if we go and look out at the weeklies, which we really need to do, as I say, we took out the 2011 highs here last week at 167.47. And the next stop really is not until the lower of these two red parallel lines. The first one's at 168.75 or thereabouts, and the one above that is the going back to the early 2009 high at 170.5. Now I don't think we're going there yet, and the weeklies actually aren't really showing an awful lot, but the dailies are pointing steeply higher, so we could see a bit more topside. Now, the only concern I've got is that potentially we're making a broadening top here, which suggests that if we do see cable run higher, we may run out of steam at around 168. And if this is the case, it could be that we see quite a steep turnaround in cable. That's not showing any signs of happening as yet, but I think it's something to bear in mind. And if you are long, I think I'd be raising stops fairly tight level. If we go back under this previous high here, which is at 166.70, that's about 80 points away at the moment. I'd certainly be raising stops to just under there. Dollar Swiss, well, it made another low last week, a spike low, but it's very choppy, as you can see in the short term. The dollar does look soft, as I say, with the euro. It's choppy, but the dollar does look as though it's heading lower. Now the next support below, we've got this double bottom here around 89.02. If a break of 89 would suggest a bit more of a decline down to this sort of 88.80 level, below which there isn't an awful lot ahead of 88.60, and then this previous spike low down here. I can't even remember what that was for now. That was in it was Boxing Day, so it would have been very thin. 87.98 I think was the low. So the dailies are no, these are the 4 hours. The 4 hourlies are looking a little bit soft, and the dailies equally look as though they are building momentum to the downside. So it does look as though that's the path of least resistance. If we do turn around though, there's when I say major, the first resistance is back above 90 here is at 90.20, and then at 90 sort of 35 it's going to be pretty tough to break. I don't think we're going there today, and in the short term, it may be that sort of 89.5 up around here covers it, as I've said before, with Europe not showing any data and the US on holiday. It could be a fairly quiet, choppy session, and just trading around within this congestion here. Now the Aussies opened up a little bit higher this morning. Let's just go to we can see here there was some loan data out of China over the weekend, and that's pushed the Aussie a little bit higher. It's been up to 90.60. Where is it? 90.64 so far this morning. Now that was equal to this previous high up here before the sell-off related on the jobs data last week. So we've regained all that lost ground now. Actually, I don't think the Aussie looks too bad. I wouldn't be getting overly enthusiastic, but if we can break above this sort of 90.75 level, this previous high up around here, where was that? 90.85. If we can get above there, then we might be in for a bit of a run higher to sort of this 92 area. But there's plenty of resistance ahead of that, and I think 91.05 is the first major FIBO resistance. We then got the 100-day moving average at 91.35 and the 200-day moving average up around 92.15. So a break of 90.85, as I say, could take us up to this 91.05. Now I'm told there's some decent stops building up there, so we could see a bit of a push higher. But ultimately, if we do head to sort of 92 to 92.5, probably looking at selling it again for another run back towards the downside. But at this point in time, I think the downside is pretty well protected, and I'd be quite surprised to see it back under 90 cents anytime soon. And then finally we've got the Kiwi, which is a little bit lower after some soft Kiwi retail sales this morning. Hasn't done any great damage, and is sitting around this 83.60. Now the Kiwi has been in a reasonably steady uptrend, and it could be that we want to take a look at 84. This previous high up here was 84.32. It does look as though the indicators are running out of a bit of steam though up here, and the momentum might be turning a little bit lower. But having said that, the dailies are building some mildly positive momentum, and we could see the Kiwi base it around 83 for another look at the top side. As I've said many times before, I'm not really involved in the Kiwi at the moment. This choppy trade up here looks like it's going to continue, and every time we get up to this 84, as you've seen before, we have a pretty steep sell-off. So I don't really trust this move, and you know, we could yet be in some 82 to 84 cent range trading. So that's about it for today. As I say, there's nothing really out of Europe or the States. Looking ahead, we've got the RBA minutes tomorrow, and we've got the Bank of England minutes and the FOMC minutes later in the week on Wednesday. So that'll be something to look forward to. But that's really about it for today. So have a very good day's trading, and we'll talk to you tomorrow. Cheers.